Hello friends, in the series on income tax cases, today we will discuss a very important case which is based on intimations under section 143 subsection 1. Friends, it is very painful to say that nowadays if 100% litigation is there in income tax proceedings, then 50 part of that litigation constitute due to the wrong orders passed by CPC under section 143 subsection 1. In the present case also, a very pertinent issue was before Delhi ITAT bench was that if the assessee pays some statutory liability according to section 43B, so whether in that case the CPC is justified in disallowing that amount just on the basis that the final adjudication of that statutory liability is pending before higher authorities. This issue has been taken up by Delhi ITAT bench in the case of Keysight Technologies India Private Limited versus Deputy Commissioner of Income Tax. This case is reported in 128 ITR Tribunal, short notes 51, and the date of the judgment is 28th November 2025. In the present case, the assessment year involved is 1819. In the present case, the assessee paid custom duty of rupees 99.35 lakh. This custom duty was raised by the Custom Department in accordance with Circular number 5 dated 9th February 2016. Broadly, that circular says that if the assessee imports some goods from a related party, then the valuation of that goods is to be done, and for the time being the assessee has to pay some amount of the statutory liability as custom duty, meaning thereby that the final determination of the custom duty is to be decided later on, but at that time the assessee has to pay some amount which was 99.35 lakh in the present case. The assessee paid that amount in assessment year 1819 and claimed that amount under section 43B because it was paid. But later on, when final adjudication was done, it was determined that this amount is not payable and it was refunded to the assessee in assessment year 2021. When this amount was received by the assessee in the assessment year 2021 and was taken into income, then when the CPC passed the order under section 143 subsection 1 for the assessment year 1819, then it was made taxable on the ground that this amount has not attained the finality by the adjudicating authority, so this amount should be added back and it should not be allowed to the assessee. But at the same time, it was the plea of the assessee before the CIT appeal that this amount has been paid in assessment year 1819. The deduction was claimed, and when the amount was received, it was included into the income of the assessee and the tax has been paid. It was the plea of the assessee. It is the duty of the assessee to pay the tax, and it is a claimable expenditure under section 43B, whether it is related to that year or not, because it is deductible on the payment basis. But the CIT appeal disallowed the appeal of the assessee. So when the matter came before the tribunal said that if the same amount will be added into the income of the assessee in the assessment year 1819, then it will be double taxed on the assessee because the assessee has paid the tax on the same amount in assessment year 2021. And the tribunal said that in the present case, the assessee was also justified in claiming the deduction under section 43B in the assessment year 1819 because it has been paid by the assessee within the due time, and since the liability has been created by the statutory authority, so the assessee was bound to pay it. Ultimately, the demand was deleted by the tribunal. Friends, there are a number of cases where the assessees are suffering just because of the wrong processing of the returns under section 143 subsection 1, because a number of the items are being taken by section 143 subsection 1 where there is no mistake apparent from record and where proper scrutiny is required for those matters like disallowing the exemption under section 11, but These type of adjustments are done under section 143 subsection 1, which is very painful for the assessee. At the end of this video, once again I am repeating the name of the case. The name of the case is Keysight Technologies India Private Limited versus Deputy Commissioner of Income Tax, and this case is reported in 128 ITR Tribunal, short notes 51, and the date of the judgment is 28th November 2025.